Happy New Year, everybody. I am Kevin Clark, the CEO and the co-founder of Plant Confidence Corporation. And today we're going to quickly go through the notes that I have for 2022, which we all know was not the best year if you're investing. So we're going to go through just like the old school movie, the good, the bad, the ugly today. We're going to do a 2002 review and the style of the good, the bad, and the ugly. And here's the bad. The stock market. The Dow Jones was down 9%. S&P was down 19%. NASDAQ was down 33% in 2022. Everything stock related, with almost the exception of energy and commodities, all had negative returns in 2022. Now, normally when stocks are going down, bonds become a safe haven where you can kind of, chuck your money into there, earn some interest, not deal with the stock market volatility. However, bonds are very, very sensitive to the interest rates, and interest rates were rising all year. So bonds were losing money. So there was no safe haven to hide in the bonds. The bonds, which we use PIMCO total return, as most of you have that as an option within your 401k or 403b plan, tends to be one of the most popular bond offerings in those. That was down about 14% year to date. So the traditional 60-40 investor, which is what we would call a moderate investor, 60% of the money normally being in stocks, 40% normally being in bonds, rebalancing back to those splits as the markets go up and down. It took a beating this year. There's no way to put it politely, I guess. It was a brutal year for stocks and for bonds in the same year, which many investors, and possibly even watching this, have never seen a down year in bonds, as this is the first time we've raised interest rates really since about 2008. And the stock market had one of its worst returns since 2008. So if you've been investing since 2009 and on, you've pretty much seen some really, really good markets. And this is the first time that you're actually experiencing a down market. Okay, so that's the bad. We get the bad out of the way. Let's talk about the good. First thing I want to talk about the good is investing style. So style is what we call growth, value, or blend, which is kind of a combination between value style investing or growth style investing. Value style investing is, hey, we only want to buy, a dollar's worth of assets for 50 cents. Growth is like, hey, man, we don't really care what the price is. We fully anticipate this thing going up, and we just want to get in, and we'll get out hopefully before it goes down. So different concept, different philosophy of when you're actually looking to buy stocks is, the style. Is it a value style investor? Is it a growth style investor? Is it somewhere in between with a blend? Style had a dramatic effect on the rate of your return. Value fared way better this year than growth style investing. In fact, if you were investing in large value stocks, you were down about 3% year to date. If you were investing in large growth stocks, you were down 40% year to date. So just getting more conservative with the investments would have saved you a lot of return, as you would not have lost as much money as those that were chasing growth. At Plant Confidence, almost all year, we've been telling people to switch to a value, that we put the defense, on the field, if you will, and we're willing to give up some of that growth potential, fully well knowing that, we needed to play defense. Now, here's the challenge. Your employer plan may not have value, may not have growth, may not have blend. So even though we wanted you all in value style investing, if your plan only had, let's say, a blend style, then you would have been defaulted to the blend investments in that. If you had access to all three, you would have been in value almost all year round. And shortly before year end, October for the tactical models, November for the strategic models, we would have then taken the value style and moved more to blend. We would have actually shifted you out of playing defense and starting to go, okay, we're not fully anticipating growth yet, but we're not completely needing the defensive posture, the value style investing. So if you had access to all those, you actually fared way better than those that didn't or just had an S&P 500 fund. All right, here's the other part of the good trends. The market year to date, as we said, the S&P down almost 20%, down 19% year to date. The trend for the market, though, is actually fairly good. The first quarter, we were down. The second quarter, we were down really, really bad. The third quarter, we weren't down so much. And the fourth quarter, everything except for the technology heavy index, the NASDAQ, um, made money. And the NASDAQ was only down 1% in the fourth quarter. So the trend is starting, hey, we were down and we're starting to come back up. Now, whether that trend can continue into the next year or not, I'll equate it to being a Chicago Bears fan all my life. It's like saying, hey, the Bears really played well against Green Bay in that fourth quarter. So, their next game against Detroit, they should be doing pretty well. Doesn't quite always work that way. We've got a brand new year this year. The reset button has been pushed. So it's a brand new game. So just going back to that Chicago Bear equation, yes, the trend is on our side right now. The trend is our friend. However, it's a new game, and we shall see starting tomorrow, January 3rd, how we start out that new year. So let's talk about the ugly, and this is going to be very dependent upon what happens to the economy and the stock market, which are two different things. The stock market obviously is, what you're investing in. The economy is, hey, how are we doing as a whole, as a consumer, as housing and, spending and all that kind of stuff. So the ugly is Jerome Powell and the Fed. There's no way to sugarcoat it. There's no way around it. Jerome Powell, Chairman Powell, is really hell bent on breaking inflation, which is a good thing. We don't want prices to continue to go up like a rocket ship. However, the only tool they really have in their toolbox right now is to raise interest rates. And so far, and we'll see in February when the FOMC, the Federal Open Market Committee, meets again and decides what the interest rates are going to be. So far, they seem hell-bent on destroying that inflation as much as they can, even if they damage the economy and cause the R word, recession, which everybody is talking about. The last statistic I saw was 70% of economists said in 2023 that we as America, as well as the rest of the world, will be in an economic recession, which could be bad with high inflation rates. If everyone starts pulling back on their spending, then people start laying off people because they're not having the money come through, and it becomes a self-fulfilling prophecy. Now, that being said, all that would be horrific. However, we could be entering what we call capitulation. And capitulation and the stock market is a term essentially when everyone goes, I'm freaking done with this market. I'm selling everything. I'm going to cash. I'm not going to deal with this anymore. And then what happens is the institutional investors come in when they see the capitulation occurring, and they come in, and normally the market makes a bottom. When we get to that capitulation, everyone just goes, this is ridiculous. That's when we usually see things turn and go up. So we may be at that point. So if we have the trend as our friend, if we're at capitulation where people are just throwing their hands in the air, especially as you're looking at your year-end statements, or you logged on to your plan and you're like, shoosh, this is ridiculous. Let your neighbors and stuff do that. You keep following the advice that you get from Plan Confidence, because as you can see, we've done things to protect your money all in 2022. Your future contributions, or money that was going in with every single paycheck, was buying you more and more shares. So when this market turns around, you are going to be well better positioned than the neighbors or the people that go to cash and they say, you know what, I had it. And those are usually the ones that get back in after the market's already gone up 15, 20, 30%. And then when that happens, the market goes down again. So it's very, very cyclical. I've been doing this since 1997. This is not the first crash I've seen by far. This is not the first rising interest rate environment that we've seen either. The only challenge that we have as advisors to you and your money is we're limited by the options your employer chooses for you within your plan, be it a 401k, 403b, so on and so forth. So we're going to do the best that we possibly can given the options that your employer chose for you. Once you switch jobs or become eligible for an in-service distribution or retire or something of that nature, and money can go into an individual retirement account, an IRA, then we're actually no longer beholden to just the options your employer has, because now we could use just about almost anything within there. So we don't have a security selection or an asset allocation problem in the IRA. So today is January 2nd. Tomorrow, January 3rd at 9 a.m. Eastern time, you're all going to get an email or a push notification if you're using our app, letting you know to go in and change the future contributions for both the strategic and the tactical investors that we have. And if you're a strategic investor, how to rebalance your money going into 2023. If you're a tactical investor, we've made the last changes in December there. You don't have any rebalancing to do. You just need to change your future contributions if you have that turned on. With that, if you have any questions, please reach out to your financial advisor. Reach out to myself if you have any questions on how Plan Confidence works. Otherwise, I wish you, your family, friends, coworkers, everybody a very, very, very happy 2023. As we know, everything we hand you says past performance is not indicative of future results. So we're starting a brand new year. I couldn't be more excited, and I hope you are too. With that, I wish you and your family Happy New Year. Peace.